All right, so I get asked this all the time. So if I sell my home and I have nice profit, I want to roll it over to a new primary. Do I have to pay capital gains? Depends. So first of all, you're going to use your original purchase price. You're going to be able to add on that any closing costs, those kind of fees that you paid over time, any long-term improvements. I'm talking like roofs, remodels, AC, furnaces. You add that together, and then in certain assessments like for sidewalks and stuff, anything that adds long-term value, they call that the stepped up cost basis. So let's say, for example, you bought the place for 300, 10 grand in closing cost, 40 grand in improvements. Your stepped up cost basis is 350. And then if you sold it at 600, you have a 250 that was gained out of the property. But if you've owned the property as your primary 2 out of the last 5 years as an individual, you get a 250 exemption, and as a couple, $500,000. So under that scenario, you're not paying any taxes, but you just got to make sure you live in the property at least 2 years. So can't be flipping properties like every year to get around this. Inherited properties, you get with the value when inherited. So you get that new higher basis right out of the gate, so you don't get hit with the taxes on that. And then rentals are a little more complicated because they had depreciation recapture that kind of goes into it. So it's a more complicated formula, but you can use a 1031 exchange to at least avoid paying taxes now, kick it down the line when you have a lower tax bracket. But that's the way it works. Any questions, let me know.